Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps from today, some of the top plays from today. Well, first up is ticker symbol PTIE. Very sweet move today. It is hitting 85. It closed at 85 on our side. This is the level where it's topped out at in the past. Same thing with Fasto here, hitting 95. You could see when it hit this level each time in the past that's where it topped out. And then you have plus DI and ADX up here at 67. This is a very frothy level. Very perpendicular trajectory there on plus DI, which signals an unsustainable move higher. A big move today. Check out the giant flagpole. It came up here and it closed right above the bottom of the gap. There's a gap between low of day up here and high of day down here on the top of this candle, and the close above the bottom of the gap. That was very bullish. It needs to stay above that level. Now, in after hours trading, it was at 263, so it dropped below the bottom of the gap level, and it's testing this high close level from July. It'll signal downside risk if it drops below 260. The risk is that it pulls back into the bands and test EMA, pulls back into the bands, which the upper Bollinger Band is down here at 191, and EMA 4 is at 176. So that is the downside risk. And there is an unfilled gap between high of day yesterday and low of day today. If you look back here on the 15th of August, there was a big gap up open with a big volume bar, and the next day there was a red candle and a red volume bar. So there was a gap down. So that's something to keep in mind. It was a similar setup to today. Giant volume bar today. So what has to happen is it has to turn this bottom of the gap level into support. And if it does, the 100-day simple moving average at 411 will be the next target. Just above are the 300 and 200-day simple moving averages. Failing to break that bottom of the gap level would signal consolidation likely and a possible pullback to that EMA 4 level. Now tomorrow there is a conference call tomorrow at 6:30 or 7 o'clock or Pacific Standard Time, 10 a.m. Eastern Time, and so that's what got the stock running today. It ran up 200% on buy the rumor. So we'll have to see tomorrow if there is some really good news to keep it going, or if it becomes sell the news. Just keep in mind the golden rule is never hold a penny stock into a conference call, just because you never know, bad news could come out. So yeah, it's just a way to play it safe. You can always jump back in after the conference call. That's just the way to play it safe. You can always roll the dice and ride into a conference call, but it is very risky. Just keep that in mind. Okay, let's look at INPX here. Closed up 104%. Check out how RSI is above 70. It's at 82 right now. It tends to pull back when it gets above that 70 level. Check out Fasto here at 82. This is another stock that fails to stay above 80 on Fasto. When you see this pattern similar to PTIE here, where it fails to stay above and tends to pull back, the history tends to repeat with these stocks. And so when it gets to these frothy levels, it's a red flag, and you look for signals that I should be locking in gains. Now you do have plus DI at 56, so it is at very frothy levels here. It's busting out. Huge move today. Congrats everybody. I know people were in all these stocks in the chat today, so people were doing really well. The key is just you can't get greedy. Bulls and bears make money, but pigs get slaughtered. And so when stocks are failing to break resistance or showing signs of being overbought, a lot of times it pays to lock in gains, and that way you can reload lower. Now what happened here is it came up and it filled the gap. There's a gap over here back in July between low of day in this candle and high of day in this candle. You can see this wick didn't quite hit that red line. Well, today the gap filled, and so a gap fill to an upward gap fill is a climax event. As long as the share price stays above the top of the gap once it breaks, it signals it can keep pushing higher. If it breaks above the top of the gap and then pulls back below intraday, it's a signal to lock in gains. It's just a simple rule to follow. More times than not, if you follow that rule, you'll be happy that you locked in gains once it didn't stay above the top of the gap after the gap had been filled. Now in after hours trading, it's down at 36. They could push it pre-market, it could head higher, but right now that theory is being proven correct once again. If you sold up here at 48, tomorrow you might have a chance to load at 36, or if the candles work back into the bands the same way they did here, here, and here. Notice that when the candles get above this purple line, the upper Bollinger Band, the candles tend to work back in the bands. That's the same setup here. And if that happens, then EMA 4 at 29 will be the key level to hold, or to hold on a pullback. If it bounced off of that, the chart could still be super strong and it could keep pushing higher. Now to the upside, if it can break above this 47 resistance zone above the top of the gap. That's going to signal upside potential, and 61 up here will be the next target. Okay, so yeah, check out the big volume behind the move today. So let's look at VTVT here. I wanted to show you first, so I didn't forget, the accumulation distribution and shaken money flow down here. And so notice how they fell off the cliff. There was a big spike yesterday on both of these indicators, and then today they just dropped off very hard for accumulation distribution. Look at the huge volume bar today and big volume yesterday. And so yeah, this was a very strong move today for VTVT, but it formed a long upper wick. Let me show you the top first. It closed up 70%, so you would think that accumulation distribution would be spiking up with the big volume bar, but since it dropped down, it's a sign of dilution, that they were selling shares. Check out how RSI is at 90. That's an extreme overbought level for this stock. You know, it's not likely to be able to keep pushing higher when it hits that level. It's more than likely to take a breather. It could, you never know, but it's just a red flag when it gets to those levels. Now Fasto here, you can see it had a big pullback. It pulled back because of this long upper wick on today's candle. Check out the perpendicular plus DI. You know, that's an unsustainable move. So yeah, this is a giant 2-day move. You know, it went from down here in the 70s all the way up to $6 in 2 days, and so today it pulled back after hitting the $6 resistance zone. What happened was it came over here and it hit this March support zone. This was support before it broke this 525 level, and so breaking above it and then closing back below, you know, trading above it and then pulling back below, that was a red flag. That was signaling that it's likely to pull back. Today's candle is floating above the upper Bollinger Band. The upper Bollinger Band's way down here at 224. The close yesterday was right here at $2. So there's a gap between high of day yesterday and low of day today, and so the big gap up open and candle floating above the upper Bollinger Band was a red flag. If you didn't lock in gains up here when it was above this blue line, the 300-day simple moving average intraday, and then drop below, that's another signal to lock in gains. Just keep that in mind. It has to stay above that level once it breaks. If it drops back below intraday, it's a sign that it could pull back. Now it is hitting the next key support level, this red line. That's the last line of defense for the bulls. Otherwise, it could fill this gap below. That's the 200-day simple moving average at 307. If it can stay above 307, then it could push higher, but it has to get above that 386 level, above the 300-day simple moving average. If you see a drop below 307, that's going to be a red flag, and the candles could work back into the bands and fill this gap. A drop down here just above $2 came down to this EMA 4 level. That would fill the gap. Notice there was another gap over here between high of day, low of day on this candle and high of day on this candle, where the gap up open kind of messed up the gap fill. So yeah, there's a lot of space on the chart. You know, this is like basically what this is a giant island cluster reversal pattern, possibly. You've got the gap down and then a huge cluster of candles and then a gap up. And so if it could hold this 200 and 300 and push higher, it could form an island cluster reversal pattern. But if it broke below, you know, I would be looking for that gap to fill and a possible drop down to $2. If $2 held, that would be a nice technical bounce level. If you look here on the 15-minute chart for VTVT, if you weren't selling before, the sell signal, you know, if you didn't lock in gains earlier on the climax spike, notice how it climaxed out right here. This break below the middle Bollinger Band, when the dotted purple line broke, that was a red flag that the chart was breaking down. You know, lock in some gains here. Don't be a greedy pig after the huge run. Now it retraced down to that 50 simple moving average, currently at 332. That level needs to hold. Now it's at 321 after hours, so that's a red flag. If it fails to trade above 332 tomorrow, that's going to be a red flag, and it could come down here and fill the gap. The gap is going to be between low of day today, which is the right here, and then high of day yesterday, which is right here. And notice how that lines up perfectly with the 100 simple moving average at 206, and that very well could be the target if 330 is resistance tomorrow. Okay, now let's look at OHGI. Okay, so it closed up 33% today, so keep an eye on this one tomorrow. RSI is at 50, so it has a lot of room to run until that 70 overbought level. Fasto's heating up. You've got a bullish crossover here at ADX. Notice how the green line crossed above the red and the black line to the upside. That signals the chart is heating up. up. Now notice there was a close today above this dotted purple line. That's the middle Bollinger Band, currently at 20 cents. As long as that level holds, the stock is in play and a possible new uptrend could begin. Now that's the stop loss level. If it were to drop below and close below that level, that would be a sell signal. The last close above the middle Bollinger Band was back here on the 17th of July. Now that level failed to hold and this nasty downtrend continued, so that's why it's very, very, very risky to be long this stock if it's forming candles below this dotted purple line. That's the middle Bollinger Band. It's also the 20-day simple moving average. If that level does hold and it does turn into support, we'll be looking for a run up here to the upper Bollinger Band and the 50-day simple moving average at 26. Notice how these candles here, it broke above the middle Bollinger Band intraday, but they failed to close above. Finally, letting it close above that level does signal more upside potential. Okay, yeah, and also another thing that makes it interesting is the volume. Notice the big volume down here. That's what you want to see. You want to see volume at the bottom of the chart. That many times is a signal that the bounce players are loading and they're preparing to take it higher. Okay, thanks for viewing this video. Please come check out the chat if you'd like to learn more about charts and technical analysis. Okay, thank you.